Well, hello and welcome to today's presentation with Lil Roberts on strategies and tips for small business growth. Lil prides herself on building customer-centric companies built on teamwork, technology, and integrity. After a successful exit from the manufacturing industry, Lil serves as CEO and founder of Zendu, a VC-backed cloud-based fintech company based in the greater Miami region. We will be having a Q&A session at the end of today's webinar, so if you can save your questions until the end, that will be great. Thank you for joining us, and over to you, Lil.
Thank you so much, Allie. Pleasure to be here. Hello, everybody. Today, we're going to go fast and furious, and we're going to talk about strategies and tips for small business growth. One, we want to do a shout out to all the heroes out there that build small businesses and take care of their communities and help their teams grow and prosper and learn. And so let's talk about the digital transformation. We're going to cover digital transformation, culture and team building, and financial structure, and talk about how to scale your business. First, a little bit about Zendu. Zendu, as Ali mentioned, we're in the Fort Lauderdale area, but our customers are all over the United States in 13 countries. We're in 48 states and 13 countries of businesses that happen to have businesses in the US. And we do online bookkeeping and accounting for small business owners, as well as fractional CFO work. We have a team of customer-centric team members that love small business owners and love to partner with them to make sure that in their journey, they have visibility to their financials. So thank you for being with us today. Let's get started. We're going to talk about digital transformation. And digital transformation is something that has happened in the Fortune 500 companies for a little over the past decade. So we're probably 12 to 15 years of digital transformation in Fortune 500s. On the small business arena, it has only been really in the last 5 to 6 years that the cloud-based software has been big in small business and helping small business owners to streamline operations. And during the pandemic, there were certain industries that adapted and adopted quickly because they had to survive. And there was a framework that you can use to really understand what are the steps that you can take in your business as you transform it, and that will give you the return on investment quickly, because it's an overwhelming task, right? You've been doing your business and running your business with certain processes for a long time, and you're trying to get on this new train of the digital train, and you don't have the time because you're already working 70, 80 hours a week, and you're thinking, how do I even begin to do the research? So we're going to talk a little bit about how to go about that today. But before we get started, let's picture in your mind, an experience. We all go to restaurants. So an example of digital transformation is that you go online and through OpenTable or some type of other technology, you are booking your reservations to go to dinner. And you don't have to call, you don't have to wait for somebody to answer, you don't have to wait for the return call. You're just going ahead and you're looking what's available and you can book. Makes it very streamlined and easy for us as the consumer, right? Then you go to the restaurant, and yes, you can have a menu, but you can also download a QR code on your table, and you can be ready to go for when the server comes over. You place your order, and now for those of us, prior to digital transformation, you would wait to leave, and it would be that first you had to wait for the server to come over and to give you the bill, and then you'd put your credit card down, and then you'd have to wait for them to come back and pick it up, and then you'd have to wait for them to go do the piece of it that you can then check out. And an example of today's world now is that when you're in a restaurant and it comes time to check out, they come over with a handheld device, either from Toast or another provider that has point of sale systems, and they check you out right at your table. And so what does that do for the consumer, for the customer experience, is it's a much better, faster, seamless transaction for you, right? And so you have a better feeling when you walk out because of the whole experience, from booking your reservation to being in the seamless of placing your order and all the way to checkout. For the restaurant, it allows them to turn the table much faster. And so there are industries that have moved to the digital transformation faster than other industries. And you can see the results. If you think about how in the course of your daily life and your interactions with businesses, you can almost think of those, from a hair salon where you no longer have to call to make an appointment with your stylist. You can just through a link set the appointment that's convenient for you, to getting a notice the day before, to checking out the experience there that maybe your credit card's on file, or you already know what the bill is going to be, and it's just a much faster, seamless. And so the digital transformation is designed to allow for more time for you to process more business in your business, and more time to give back to your customers so they have a better experience. So how do you go about doing it, right? Like you think to yourself, I'm a certain business, where do I even begin? And so what I say to business owners that we help and we work with is, think about your business and think about where the majority of the time is that is spent that you believe that you could streamline with technology. So look at those areas first. Don't try to eat the elephant all at once. Eat the elephant one bite at a time, right? So when you look at your customer journey in your business, think about, how are your customers interacting with you? What do they need to do from the beginning of the interaction all the way through to the end result transaction, where money has exchanged hands and where they now have their goods or product or benefit of the bargain, right? From whatever that they were coming to your business for. And when you architect that journey, just in plain, simple language, just take a sheet of paper and write, how does a customer come to you? What are the ways that a customer comes to you? And what are the ways, below that you would want the customer to come to you? Where are your gaps of what you're missing out, right? And that may be the interaction with your website that you're not able, a customer can go and learn about your business, but maybe they can't transact on your website. So that would be an area to allow the customer to transact on your website. And there's lots of plugins, for that type of stuff on your website. So first you want to identify it. What's the customer journey? Go through the process. And then on a separate piece of paper, you want to then do that same journey for your team members. So now when a customer is engaging with your business, what is the experience from the team member point of view? What is their journey? And where do you think technology could impact them? And just from that simple exercise, it's going to illuminate to you the areas of opportunity, and just pick one or two of those areas, and that's where you start, right? And so from that point, you'll start to get time back in your business. You'll increase your profitability, you'll increase your customer experience, and things will, you'll be on your way on the digital transformation. Implementing it, you want to make sure that when you go to implement this technology, that look at 2 to 3 different pieces of technology in each category. So what is the category? Is it payment? Is it customer engagement? Is it scheduling? What are those pieces? And then you want to see if you can piece together something where they all integrate with each other. And we'll talk about some of those integrations when we get into the financial structure in just a few minutes here. So digital transformation, you can always refine and add to that, but it's a key area of your business that you need to have in place in today's world, or you're missing out on opportunity and revenue. The next area, culture and team. Right people, right role, training, environment. So culture is something that lives in a company. It's not something that you set out and say, oh, we're going to have a great culture and our culture is going to be this. Culture really starts with the people in your company. And actually it starts a step back from that. It starts with the mindset of the owner. So if the owner is somebody who builds teams, for me and all my businesses, it's all about building teams and fanatical customer service. So we are a customer-centric organization. So your culture will start there, but it evolves greatly from there. So the right people in a company are going to build the culture of your company. So determine who the right people are for you. What type of people do you want in your business? I'll give you an example. At Zendu, we hire heart-led people that run into burning buildings. And we say that in the interview. When we're talking to people, we say we look for heart-led people who run into burning buildings. And what that means is it means that it's people who are heart first, they care about the other humans, and they want to do the right thing, and they want to be problem solvers. Somebody who runs in a burning building, they're problem solvers, right? They say, oh, the building's on fire, let's go in. They don't run away from it. So right people, right role. Now, once you get the right person, right? So the mindset of the person, the heart of the person, then you have to say, what skill sets does this team member need? And what I see happen over and over with companies is they say, I need somebody to do this. So, and then they don't define this. They just say, I need somebody who's going to be a server, right? We'll use the restaurant as an example. We need servers. Well, they don't then define that further as to, well, who are your clientele? What is your restaurant a fine dining that you want to have a relaxed, casual dinner? Or is your restaurant something that is maybe a fast casual where you have turnover? And so you have to understand within that role, what are the functions that that person needs to do? What's the cadence? What's their speed? How fast do they need to think? What type of demeanor do they need to have? And so basically, you're creating a scorecard for the role of what you believe the personality type and the skill sets are needed to be successful in that role, and then start interviewing. And so what I see as the number one piece that's it's misstep or it's overlooked is that if you don't know who you're looking for, everybody looks like the person that can fit the role. And so now you start interviewing people, and then we all fall in love with the people that we're talking to because everybody has a great story and they want to come in, and everybody's showing you their best when they're coming in for for the interview in the first 30 or 90 days. So right people, right role, define the role without anybody in mind. Or if you're going to put somebody in mind, take one of your top performers in your company in that role. And if you're adding to that same role, say, what are the things about that person that they do, how they think, and who they are, and how they move through the world. And let's find that in somebody else. And then the next piece is training, right? So it's super important. Our company, we do a 1-week training for our accountants on our ops side. Our accountants and tax people go through a 1-week training, and that's in a classroom environment. And so we're investing a lot of time, and not everybody makes it through that week. And you want to find out when you're hiring, there's a saying, right? Hire slow, release quickly. And it's important to do that. So it's important for the human that you've hired, that you're employing, because if they're not going to be a fit, it's not fair to them to go home every night and feel like they're not in the right role or they're not going to be successful. And the sooner you can help them find the role that's going to be successful for them, the better it is for the human. And then for your company, it's important because if you spend 30, 60, 90 days training somebody, and when we all hire new team members, typically they're not going to be productive for us until really after 60 days, but definitely the first 30 days typically is time spent that you're investing in them. So training is very important. And then the environment and the tools are also very important for when you have the right team members. And what do I mean by that? So if you happen to be an in-office company and you're in professional environment, all of your team members, I believe, should be on 3 monitors. Monitors are so inexpensive, $120 for additional monitors. All of our team are on 3 monitors. Reason being is that there are studies that prove that people are 30% more productive when they have multiple monitors. And so something as simple as multiple monitors is going to be a better experience for your team members. They're going to have less fatigue as they move through their day, and they're going to be more productive. But it doesn't stop with that, right? It also is about what's the right software. Just because you've had a certain software package for the last 5 years, 7 years, maybe it's a CRM. Maybe the company has now grown and it's past the limits of that particular software. And if you put in updated software, it's going to allow your team to be more productive and move quicker through their day. So when it comes to environment, it's their workspace, the amount of space that they have for their workspace, the tools that they're working on a day-to-day basis, and then also the software. So those three pieces of the right person, right role, training and environment helps tremendously with culture and team. And business, there's 4 pillars to a business, and it is, the story of the business, and then it's people, process, and cash. And to be a successful business and a business that's going to scale, you need all 4 of those. So on the people side, there's a great book. It's called The Who, and it's by Jeffrey Smart. Jeffrey is Geoffrey. It's called The Who. It's about a 3-hour read. Phenomenal book that will put you on the right path of hiring practices that will lead to success in your growing company. Last piece, financial structure. So on the financial structure side, business, cash in a business is the oxygen to a business. And if your business does not have the ability to make a profit, it is not going to survive. And so this is an area that we often see overlooked by business owners, because most small business owners get in business because they're passionate about something, whatever that may be, whether it is a product that they put on Amazon, or it's a restaurant that they're building, or they're in marketing, a marketing company, whatever it is, it's about their passion. And lots of times it's certainly not about numbers. And business owners typically hate dealing with numbers, right? So, I mean, really, if you think about it, most humans don't like math. And so this is the part of the business that's overlooked. So same thing here, 3 key areas. Number 1, you have to know your numbers. You have to know that you have the path to profitability. And so what do I mean by that? Let's just take, if you're a shoe store, sneaker store, and you're selling, caps and sneakers, and you buy a pair of sneakers at cost, and the cost is $100 that you buy it from the manufacturer, and you want to make a 30% profit on it. If you ask that question, if I say to you, so what do you sell it for? Most people would say, oh, I sell it for $130. Well, $130 it means that your cost has to be at $91 in order to have a 30% profit margin. So you're leaving $9 out of your bottom line. So really, to have a 30% profit margin, you have to sell the sneakers at $142. And so most business owners haven't dived into their numbers to know truly what they are. Like, is my profit margin the right profit margin? Will it cover my fixed expenses? So in business, there's 3 key areas of numbers on your financials. There's 1, your cost of goods, right? And cost of goods can vary, and it can vary by how well you're buying your product. It can vary by, the type of shipping that you're doing with your product. And if you're ahead on ordering times to keep your shipping costs low, are you taking advantage of closeout sales because you have cash flow that you can do that? So that's 1 key area of your financials. The second area is going to be your fixed expenses. And your fixed expenses are things that you can't change. And that is your rent, your insurance, loan payments. Those types of things will not change. That is your monthly nut, whether you do $1 worth of business or not, to keep your business alive. Those are your costs. And then the other side of it are your variable expenses. And your variable expenses are going to be the things that you're buying during the month that you don't necessarily need, but you may be investing in the business for. It may be your payroll, how much you're staffing up. So businesses have those 3 key areas, and to understand those are going to help you to drive for success and drive for growth and have money to be able to invest in your business to grow. Second area is tax structure. Tax structure is a big area that relates to how much profit will actually stay in the business owner's pocket. And what I mean by that is, after you reach your net income on your profit and loss statement, then you still need to pay taxes to the government, federal tax. And you're going to pay, you have to figure that approximately 30 to 35% of your profit is going to go to the IRS for taxes. And if you are in the right tax structure, there are ways that you can lower the cost, the taxes that you're going to pay to the IRS. So for instance, if you are an LLC, single member LLC, chances are you're going to file your taxes as a 1040 on your personal return, Schedule C. And if you're making $100,000 in profit and you're still a Schedule C, you are leaving approximately $10,000 on the table. And how you're leaving $10,000 on the table is that you're paying Social Security and Medicare on every single dollar of all that profit to the IRS. Whereas if you filed a 2553, an S election, and you became an S corp and filed an 1120 separate tax return, 1120S, you would be able to shelter a lot of that and not have to pay taxes, payroll taxes on every dollar. You would pay yourself a reasonable salary of $40,000, $50,000, and then you would take the money, the other 50,000 as a distribution. So those are areas in tax structure for you to look into. And we're happy to chat with you about that. You could schedule a free consult with us and we'll talk to you about your business. The third area is cash flow management. You know, we see a lot where business owners will look at their bank account and they'll see the number in their bank account and they'll think that's how much money their business has. And what they're not thinking about is that payroll is accruing, and in 10 days you're going to have payroll if you pay bi-monthly, and that you have payables that may be outstanding, and you have credit card bills. And so proper cash flow management is to be able to, at a certain size business, and typically we recommend that if your business is $1 million and trending towards 2 million, you definitely at the beginning of the year want to put in a budget. And then every month, besides doing monthly profit and loss and doing a balance sheet, you want to also do budget to actual. You want to say, if I projected out that we were going to do this much money and this was going to be our expenses, how did we come in? What's our health check? What's our financial scorecard? And that's what you get out of having monthly financials, and having a professional do your monthly financials is important. Some people will say, well, I took finance in college and I took accounting in college. And so that's great. And it means that, you know, you'll understand working in Xero or QuickBooks Online as a general ledger software. But the piece that you're missing is you didn't take in college the degree to understand accounting and understand tax, and how can you maximize your tax savings. So if you're doing your own books, chances are you're not capturing everything that you could be writing off that's going to save money for you at the end of the year when it comes tax time. And so look at having a professional do your monthly accounting for you as an investment in your business instead of an expense in your business. Because if you treat it as an investments, we all expect ROI, right? We all expect a return on our investment. And so if you're paying, you know, our plans start at $395 a month. So as an example, if you're paying $5,000 a month, $5,000 a year for your accounting to be handled outside, number one, you're getting time back that you can work on growing your business and impacting a different area of your business that's going to result in more growth. And number two, on that $5,000 investment, you're going to be saving possibly 3, 4, 5 times that on taxes that you may have to pay the government, because your books are going to be categorized right to maximize proper tax savings. So important. Financial structure is huge. You know, there's other areas of the business that we're not going to talk about today on this webinar, but we'll do in the future, which could be sales area, marketing area, operations of your business. And every area of your business requires having key metrics and areas that you work on so that you can optimize the performance of that part of your business. So thank you. I'm going to take questions. Zendu delivers financial peace of mind for small business owners. We love small businesses, and we love to work with customers that are anywhere in size from $300,000-$400,000 a year in revenue up to $50 million, $55 million a year in revenue. We have plans, custom plans for the higher level revenue businesses, and we have set plans for businesses that are anywhere from that $300,000-$400,000 up to 3 million. So thank you. I'm going to open it up for questions. Allie, any questions?
Yeah, the first question we have is, what are the most common financial mistakes small business owners make, and how can they be avoided?
Um, Great question. So number one financial mistake that we see, 50% of small business owners are embezzled. So they don't put checks and balances or controls in around the finance side of the business. So what do I mean by that? They don't have credit cards that have limits. So if they give team members credit cards, the best practice for that is to have credit cards that have limits, $500, 250, 1,000, whatever that number is that's required for your business in that area. So that way you can stay in budget, not have surprises. They will allow other people to pay their bills, whether it's somebody within their business or a service outside. And so it's one thing if you're structuring it that you're using, say, bill.com, and they're paying the bills, but you're overseeing it and you're signing off on the final step of it. But if you're giving somebody, and we see this all the time, where business owners will have internal team members that have check signing authority, and they're signing the checks, and they may even be somebody that's been with them 5 years, 7 years, and all of a sudden it's very easy today in a digital world to spin up a fake company and spin up fake invoices and have all the paperwork there, but it wasn't something that the business was using. And we see that typically in businesses that range 750,000 and above is where there's just so much for the small business owner to do that they take their hands off of certain things. So by all means, you have to take your hands off of certain areas in your business, but finance is not the one to take your hands off. If you're working with an accountant, they should never have access to be able to move money and send money or transfer money. It's so easy now to do it as a business owner. You can do that on a mobile app yourself, that if you need to do that, nobody else should be wiring money. It should be, finance, know your numbers, know where your cash is, checks and balances on that.
All right, the next question we have is, how can small businesses leverage digital marketing to increase their growth potential, especially on a limited budget?
Really great question. So how can small business owners leverage digital marketing to increase their business? So, it depends. First of all, you have to figure out where to fish. So you have to fish in the right pond. So who's your ideal customer? So it starts with, what's the ICP of your customer? What does an ideal customer profile look like? Who are they? Where do they hang out? What do they read? What are they doing? And what Facebook groups are they on, or meta groups are they on? Is your business one that is going to see a return from Instagram, right? So our business, we're on Instagram, but we're not going to get a big return from Instagram because people are on Instagram really just killing time and looking at stories and relaxing and unwinding. So is your product an impulse product? If your product's an impulse product, you're going to do incredible on social, right? If your product is a much bigger product or you're offering a service, then you need to be a thought leader. So social needs to be, using LinkedIn or blogging or doing video vlogging with video. So identify, who your ICP is, and then identify what segments or what rails you should use in social media to attract your customer and to be, where they're living.
Thank you. And the next question we have is, what key performance indicators should small business owners track to ensure they are on the right growth path?
So pick three, and they change depending on the stage gate of your business, right? So number one, if you don't have revenue or sales, your business is not going to survive unless you're a startup. So we started without revenue. We started with building technology. So, and we had investment. So revenue is number one. Know your revenue number. Know what your costs are. So you need to know what your cost of goods or cost of sales are, and you need to know what percentage that is of your business. So to use easy numbers, business is doing $100,000. If you're a product business, your cost of goods should not exceed, 32%. Because if you do, there's not going to be money to cover your other overhead, unless you're an e-com business. If you're an e-com business, your cost of goods are going to be higher because you're using the infrastructure of Amazon or 3PL, fulfillment center. And so you're not going to have rent. And so you need to know what is that percentage, and you need to know what is it for your industry. So identify your business as an industry group and do research on the industry group, and just Google top, KPIs for this industry. And then say, does that make sense for the stage of my business? So revenue, cost of goods, cost of wages, and that's going to tell a big tale on what it takes for your business to be profitable. And then from there, you can do analysis paralysis. If you measure too many things in your business. So in the early days of your business, measure 3 things and know that if you're on an island, those are the 3 things you need to know if your business is going to survive and continue to grow. And then as you get bigger, I always equate it to startups and small businesses just getting going are like a pot of beef stew. Everybody's doing everything. So, everything's all in one pot. And then as you start to grow up, you separate the vegetables and the potatoes and the salad and the meat. And that's what happens with businesses. And so when you start to go to these different departments in a business, then you need to have KPIs for each department.
All right, well, it looks like that is the final question. Lil, thank you so much for taking the time to present today. The multi-funding team really appreciates it.
Thank you so much, Allie. Pleasure to be here. And I'd like to say to the audience, please reach out. We love small business. We understand the journey, and we want to help. We want to partner on your journey and be a resource for you. So thank you so much for today.